Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
How long my hair is getting?
It's getting long. It's going to be longer the longer this bear market.
Gray. This is all gray. All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. So, Josh, we have a pretty special episode today. This is our 25th episode, and we're going to celebrate. This is our silver anniversary, you and me.
That's right. Silver anniversary. So we thought we would talk about silver today, this being our silver anniversary. So let's kick it off. Austin, what do you know about Lone Ranger's horse?
Whoa. I actually
That's what he said. That's how you stop him. You're right.
I've never seen, that's true. I've never seen the Lone Ranger.
No, his horse was named Silver.
Wasn't there a Johnny Depp movie with the Lone Ranger?
Yeah. Mm-hmm.
I've never seen that one either. Never seen Lone Ranger, but we're actually not talking about a horse.
Oh.
So you can just take a break on that.
That must mean then we're talking about the precious metal, silver.
Oh, it's precious, all right. But what do we mean by precious? And what are some examples of precious metals?
Yep. So I went right to the expert. So I asked Gollum from Lord of the Rings, and he
I do a really good Gollum voice. Are you ready?
I don't have one. Let me hear yours.
Gollum. And then he's like,
"Yeah, get closer to the mic."
It, my precious.
Yes. And so he informed me of what precious metal is. So gold, silver, that's kind of the go-to when you think precious metal. It's a metal or some sort of element that is rare and has been assigned a value that we deem above other metals.
It's actually on the periodic table.
Yeah. Yes,
gold, silver,
platinum.
And I think platinum might be too.
Yeah. And so that's what precious metals are. So there's something that is, again, scarcity, and that's what gives them the value. So if you're talking something less precious like granite, that still costs money. So if I want a granite countertop, I got to pay for it because I want one that looks like it. But granite is in higher supply, so it has less of the demand pressure on it.
There you go.
Whereas gold is limited. We don't find gold as much. That's why you hear about, gold mines and the gold rush that happened out west here in the United States is when you find a reserve, people flock to it to try to gather as much of the gold as possible because it's limited. And so being limited, there's a higher value. It also has nice properties. It tends to, gold at least, if we're talking gold, not rust, so you can use it for certain elements. With technology advances, now we use those type of precious metals because of their components that they have more value, and that's again why there's a price applied to it. It's not just some random thought, but it just this idea that, hey, this thing is cool. It can be melted down and turned into all these really neat things, and
it's also shiny and pretty.
Shiny, pretty. And so a precious metal is just a designation of certain elements that we deem to be of high value.
Did you know that there was a gold rush in North Carolina in the late 1800s that I'd never heard about?
I did not know that.
It started because some 15-year-old kid was walking through and in a creek bed or something, he found a 17-pound block or hunk of gold.
That's a big chunk of gold. 17 pounds.
So it started a very little known gold rush in North Carolina.
And that's all they found? That's one
I know, 20,000 people move there, and there's towns that open up for nothing.
Crazy. So 1800s, is that when gold became popular?
Oh, it's much, much, much older than that. So actually, archaeologists have found gold flakes in caves of really ancient people, so thousands of years ago. But as far as firm evidence of gold, similar to what we think of today, we need to look around 3000 BC to Egypt. So ancient Egypt we're thinking about here. And it was then when the demand for this shiny metal kind of began to pick up. Pharaohs and priests and other people kind of valued it really highly and actually went as far as to make the tops of the pyramids of Giza from solid gold.
Are they still there?
I don't know. I mean, I've never been to Egypt. I've seen some pyramids. I would imagine that would have maybe not lasted.
Somebody borrowed that So it just helped themselves.
They borrowed that and the nose from the Sphinx and just
that maybe
made
there's
off
gold
like
in there.
bandits.
Well, that's how they got away, because they needed the nose to run.
It's like that joke where you take someone's nose. I saw a dad joke picture that was like someone holding up their thumb with their hand with their thumb in the middle of their fingers, like you stole someone's nose, next to the Sphinx.
Nice.
It was funny. So anyway, so we can see from these ancient writings that these artifacts were highly valued by Egyptians, and Egypt was the center really of a lot of the world and technology and trade back then. So demand spread beyond the borders of Egypt. And a fun fact, it was around this time where the same thing happened to silver. So the other kind of precious metal that we're focusing on here, there was actually an exchange rate for gold to silver where gold was about 2.5 times as valuable as silver in those days. And this is where the value levels for these two precious metals reportedly began. Because since then, even to today, an ounce of gold is worth more than an ounce of silver. And it's really back then where the premium for gold, where it got started. So fun fact also, they did not use gold for like transacting. So Josh, you go to the store and you're an ancient Egyptian, obviously.
Mm-hmm.
You go to the
that's
store.
How I walked too. Like
you walked. Yeah, you didn't drive. You took your chariot to the store. Now it's a Jeep Wrangler chariot, but it's pretty cool. Off-road. You take it to the store and you go and get your. What are you buying at the store, Josh?
Back in ancient Egypt, probably like crocodile hide of something. The Nile crocodile.
Buying crocodile hide and crocodile steak.
Yep.
So you're buying it, and you would not use gold to buy for that. You would actually probably use grain. You would use grain to make transactions. You would use grain to trade, and you would use gold as a status symbol, as a wealth symbol, and as kind of a store. Not necessarily something that you transact, but gold transactions, so as like a currency, started a little bit later in what is now Turkey. Okay. And there's a fascinating article about all this on bebusiness.com, and we'll throw that link in the show notes. Okay. So Josh, I've heard that during some uncertain times, so let's think about 2008, 2009, let's think about really what we just experienced in the first quarter and really thus far in 2020, lots of volatility, lots of crazy stock market movements, and namely stock market drops. I hear that people flock to gold and silver and kind of those sort of things in times of volatility. Why is that?
Yeah, so if you think about it, like you said, the stock market being companies can be volatile in their value. So we've talked about this in the past. Stocks trade based on kind of the perceived value of that company. And so each individual stock's ownership in the company, and that price fluctuates based on the outlook on how that company will do. So if people are becoming less confident in our economy, and in turn, the companies within our economy, those prices go down. So a lot of times the flock to gold is the thought process, kind of like you said, gold's been around for centuries, all right, and has been valued as something precious, the precious metal, for centuries. And so as I'm losing my confidence in a company or in the U.S. economy in general, or any kind of thought process where those things are less valuable in my mind, where do I go? I'm going to go to something that has shown the ability to maintain a value for hundreds and hundreds of years.
Right.
And
or
so
thousands.
that's really why people flock to gold in the long run. And the other reason is the thought process is people have been accepting that as some form of currency for ages and ages again. So if things fall apart, and one of the main reasons why people own those type of precious metals is that they still have a value, so I can still trade it for food, whatever I need. And so if I own gold, now I'm holding kind of as a hedge against the uncertainty of the economy I'm in. So if things are falling apart and people say the dollar's useless, well, that's okay. I have gold. Everybody knows gold is valuable. So can you give me some bread for this pile of gold I have?
It's a real doomsday approach.
That is, but that's the underlying thought process, though, is gold has shown its value for centuries. So then you have more confidence in that than, let's say, a company that's not been around for centuries. So you can, that's, empires have risen and fallen, and gold has still been of value throughout the whole time. So that's the thought process.
So, Josh, I want to take you and listeners on a journey. Are you ready to buckle up?
I am.
All right. So we're going to talk about the gold standard. Ready?
Yes.
This is pretty exciting stuff here. In 1792, even before Josh was born, the U.S. Congress passed the Mint and Coinage Act that set a fixed price of gold in terms of dollars. So this effectively made gold and silver both legal tender, and silver was pegged about 1/15 the value of gold at that time. So gold coins were created by the mint and used for purchases. Gold for large purchases, silver coins for small purchases. However, during the Silver War, just kidding, it's not the Civil War, Josh, see what I did there?
The Civil War.
Civil War.
Civil War.
The government couldn't keep up with its debt payments using the gold or the silver in its reserves. So, in 1862, the paper dollar was deemed the currency of the land. And a bit later, in 1873, silver was taken off the standard, and that drove a bunch of people crazy. People say that they were being robbed by silver not being coin of the land or whatever back then. But gold was still backing all of the dollars of the United States at that point, all the way through till 1944. So during World War II.
1792, they started with having both gold and silver.
Yep.
Which crazy was only 300 years after Columbus first landed in the United States.
When he sailed the ocean blue.
Which wasn't the United States at that point, but when he first landed in America. 300 years later, they established gold and silver as the currency.
Yeah.
And then less than 100 years later, they got rid of silver, but kept
Correct.
Gold. Okay, I'm on track. Keep going.
You're on track. And then, so skip ahead. So then you're after the Civil War, 1873, silver's taken off. Skip ahead. Gold is still what's going on until as currency until 1944. So jump ahead to 1944. During World War II, world leaders came together to form kind of an agreement where gold worldwide was pegged to the U.S. dollar. And it was pegged to the U.S. dollar at a fixed rate of $35 an ounce. Okay. That sounds really low considering where gold is trading right now. But $35 an ounce. And this is because coming out of World War II, the U.S. was in much, much, much better economic footing than most of the rest of the world and would end up becoming, and was at that point, an emerging economic leader of the world. They had a lot less damage and things to repair than Europe did at that time, and they were on a much better footing coming out. So this was a turning point for America in terms of economic leadership around the world. So then, that's 1944, gold's $35 an ounce. 1970 happens. President Nixon ran into budget issues largely due to the very, very expensive Vietnam War, and then he eliminated the gold standard so that essentially the country could do whatever it took to pay for the war. This is why you rarely see a gold chart before 1970 because it was flat.
So people weren't investing in gold prior to 1970 as an investment like they do now.
Because you would get the same amount. You'd get $35 an ounce.
Yeah. So from an inflation standpoint, it was not helping.
It was useless.
But they were still seeing that as even with a set price, it was still a precious metal, the value of it being gold.
Well, it backed every single dollar in the United States economy. So there was value there. There was a lot of value there. And thus, by extension, by the what was it called? I'm drawing a blank on what the agreement, the Bretton Woods Agreement is what happened in 1944 in World War II. By extension, then, all of the world's economies and currencies were then essentially pegged to gold and the dollar. It was all interconnected because
the gold
of
and the dollar. Yeah.
So that's why we don't really see and talk about gold as moving much before 1970. So the U.S. at this point, it's 2020, has not used the gold standard for 50 years. And in fact, no country in the world actually uses the gold standard. So no one's currency is fully backed by, or at all even backed by, gold at this point. Switzerland abandoned that. They were the last one to do it in 2000.
So 20, even at that, somebody was using the gold standard 20
years ago. But even that, I think that they were only like 40% pegged to gold on their currency at that point. But at least it was backed somewhat by gold. And since 2000, no one has.
Okay.
So that is kind of a brief history on the gold standard. And so since 1970, gold has not been, tied to the U.S. dollar. And thus, the prices have fluctuated wildly since then because they could. So that's kind of where how we got to be where we are today. But Josh, I've been wondering.
Yes.
Where is a crap ton of gold stored?
Well,
where is the United States Reserve?
It's buried in my backyard. So,
don't tell you where. I know where you live.
No. So, here in the U.S., it is in Fort Knox. Knox with a K, just to confuse people so they can't find it. So if they're looking in the wrong spot. But Fort Knox, which actually was built in the late 1930s, 1935, 36 is when it started with the land being first transferred over. So shortly before your 1944, when they were pegging it, they had started building this to store it. So it is a very secure place. All right. So I'm going to give you some facts about this place.
Tell me more, because I'd like to visit.
Yep. You cannot. So
that's
the first
step
thing we
one.
can talk about is they do not open up for visitors. In fact, the last person to visit Fort Knox outside of the people that work there was in 2017. So not too long ago, 3 years ago. It was visited by the Treasury Secretary, Muchin, some congressmen, and a couple other state senators and stuff. They visited, they got to tour, they took some pictures to prove that there's still some gold in there. And that, based on my research, is the main reason they ever let people in there is you'll get the rumors and the conspiracy theories that, all the gold's gone. It's just empty warehouse.
That is what I was just thinking. Like they had to let someone in to prove that they have. Yeah. They probably just staged, maybe they staged a bunch of gold for the pictures.
Well, the one rumor is they painted like Tuscan bars or something with gold paint to hide that they don't have any more gold.
That is so funny.
Actually, what they do is they are audited every once in a while, and they take samples out to be tested to test the purity of the gold being held there. So there is that whole process that happens periodically. But 2017 was the last time any visitors were allowed in. Prior to that, 1974. So it's rare.
That's a big gap.
A visit. And there's only been one president that's ever been allowed to visit. And so even the president doesn't get access unless there's special circumstances.
Wow.
And so that's the crazy thing about it, is that there is really not a lot known about the inner workings because of the secrecy. Now, it's for a reason. They hold 147.3 million ounces of gold.
Is that an estimate?
Half of the Treasury's stored gold is there. Everything else is spread out all over. All right. They also hold other things there from other federal agencies. They've also been the housing spot for other countries' items during crazy situations. So, like during World War II, they held the crown of the Hungarian royalty or something because they were worried it would fall into Nazi hands. So they shipped it over and we held it in Fort Knox for a while.
So so you've seen Indiana Jones?
Yes.
Is that scene at the end of, maybe it was the third movie, the Holy Grail,
where everything's stored?
Yeah, maybe.
I don't think that's Fort Knox, but it's similar to that though, because they've held, in fact, during certain crises, they even held the original Constitution that was written, the Declaration.
Wait, Nick Cage didn't take it?
And, Nicolas Cage was unable to get access there. He had to wait for it to get back to Congress.
He was so convincing in the movie.
So, but it's so secure, in fact, that the main vault door you cannot breach it with explosives.
Wow.
Or blowtorches or drills. It's 21 inches thick and weighs more than 20 tons. Big
door.
The door. It has never been robbed. In fact, there's never even been an attempt to rob Fort Knox.
Yeah, I'm sure you can't even get close enough to...
That's a funny thing. You can see it from the highway.
Really?
Yeah, it's not out in the middle of nowhere. They're just so confident in what they built.
Here's Fort Knox.
Look, you can't touch.
Give me your best shot.
Yep. But to get in, there's a whole protocol to get to these like secure doors. That big door I told you about.
Yeah.
No one person knows the whole protocol to get into Fort Knox.
Wow.
It's actually divided up among a group of people that each of them only knows a portion of the combination procedure to get through all the different locks and mechanisms.
Checks and balances.
That's it. And so that's Fort Knox. The concept, even the roof is so thick, it's considered bomb-proof. So, you just can't get there. So
I want to throw this out there as a disclaimer for our listeners that if you hear anything, it's rain on the window of my office.
Yes,
it's raining pretty hard right now. So disregard if it comes through. Okay, so gold has a lot of uses. It's store value, currency, all of these things. It's a hedge against volatility. People view it as when they get scared. It's also used in technology you mentioned earlier. So a couple of things when you think about new gold is still being mined every day. Note that China produces or mines the most gold in the world at this point per year.
Even those people standing in the river on the Discovery Channel doing the little shaking.
That's exactly it, yeah. So about 50% of newly mined gold is used in jewelry, 37% for electronics, and only 8% for official coins. So that 37% they use for technology is actually because gold has great conductive properties. It dissipates heat very well. A lot of computers and smartphones, like Josh mentioned, use it on a lot of teeny tiny parts. Silver also is used in very, very similar ways. A lot of good properties for technology come from both of these metals, aside from just looking really good.
Now, isn't it true everybody's car has some gold in it?
Really?
Isn't it the Cadillac converter, I believe?
Oh, is that gold? I didn't know what was in there that people like so much.
I think so.
Speaking
never
of
looked
cars,
inside.
so you know of the car called the McLaren F1, right?
Yes.
In the 90s, that was the fastest car in the world, 240 mile an hour or whatever. Well, it has 3 seats, by the way, 1 in the middle and then 2 flanking it as passengers.
Makes a lot of sense. That's how I like to sit.
So then you can sell your car around the world. It doesn't matter if it's left-hand drive or right-hand drive. They were made in Britain. So that, not so related, but they did use gold foil to line the inside of the engine bay to dissipate heat. And a lot of race cars and stuff have actually used that. So that's a nerdy fun fact in my interest that has gold, but I probably can't afford the $1 million+ price tag that they're going for these days.
I was wrong. There is no gold in the catalytic converter.
What is in it that people
does have platinum?
Oh, platinum. That's a precious metal.
Yeah.
Josh, do you invest in any gold? Do you have any gold? My only gold holding right now is a wedding ring.
Yeah. I mean, yeah, when you talk about jewelry, yeah, I do own, but I don't have it as an investment piece.
Yep. Same. So speaking of investing in precious metals, so let's talk about historical performance. So really going back as far as we really can is to 1970, when prices started to move. So since 1970, gold has returned a total of 4,855%. That's a lot.
It's a big number.
Or 8% annualized over the past 50 years. To be consistent with the time frame, so looking at, again, 1970, silver has returned 778%, which is about half of that, or about 4% annualized. Half of that in terms of annualized numbers. The compounding is what makes the difference in the grand total number. The S&P 500, on the other hand, has returned 3,061%. So in between gold and silver, or about 7% annualized, excluding dividends, mind you, which actually make up a large portion of an investor's total return over a lifetime. Since the beginning of the new millennium, so 1/1/2000, gold, silver, and the S&P 500 have returned 523% for gold, 229% for silver, and 89% for the S&P 500. Now, if you annualize those, gold has returned an annualized figure of 9.5%, silver 6%, and the S&P 500, excluding dividends, 3.2%. Now, it's very important that we consider the fact that A, no dividends in there, so that is going to increase performance over time for equities in general. But B, there have been, coming out of 2000, really 3 huge stock market turndowns. You had the tech bubble right at the beginning. You had 08-09, which was huge. And then we just had one more in the last half of the year.
So I need to sell everything and buy gold because that's the best investment ever.
Obviously.
Is what you're telling me.
That's exactly what I'm saying. No, it's not what I'm saying, listeners. I'm not saying go buy gold.
So the case for investing is there is a long-term track record of precious metals growing above inflation.
Yeah.
Which is what you look for in investing, is I need my money to grow faster than inflation so I have more money to spend in the future.
Yeah.
So a case for buying precious metals in your investment platform is historically they have a track record. As soon as, again, you go 1970 is a good starting point because prior to that, it was stuck at a set rate. So
exactly,
it's irrelevant. So at 1970 going on, it's done a very good job of providing returns for people who hold it long term.
Yes. So
the case for not owning precious metals would be the idea that there needs to be a buyer on the other end. It's the same with any investment. But when I hold a physical item like gold, I have to store it somewhere for one. And gold is not light, by the way. And so if you're holding physical gold,
Yeah.
it's heavy. And so I need a place to store it. And if you're talking larger quantities, then you need security, because if somebody takes my gold, there is no FDIC insurance or anything like that that backs the fact that my gold was stolen.
Or if you hire someone to store it for you, as a lot of people do, there are costs associated, large costs associated with that.
Yep. And then the other idea too is, for the transaction to work, somebody also wants to take that physical gold and use it for something as well. So in the long run, I think, gold can be a very integral part of a diversified portfolio. There's nothing wrong with holding precious metals for an investment purpose.
Right.
It needs to match your long-term plan.
Right.
If you are in need of money, it is sometimes hard to get money from a physical item, whether it's gold or silver or whatever.
Yeah.
And you saw that a lot with, a lot of places popped up, we buy gold, we buy silver. You saw those signs all over the place. Now, there's a cost to that. You weren't getting the full price of whatever that gold or silver was on the market. You were getting a reduced spot for who's ever taking it, because they're the middleman in a sense. They're going to take a cut. So if you need quick access, precious metals can be a little harder to get cash from that.
So Josh, before we go any further, I have got the dad joke of the week for you.
Oh boy, I'm ready.
I've been brewing this one up for some time. Are you ready?
He
takes a drink. He's going to spit it out. It's so funny.
I wanted to swallow the drink before you said anything, so I didn't shoot it across on my computer.
So Josh, what did the baby find at the end of the rainbow?
What did the baby find at the end of the rainbow? I don't know.
A potty gold.
Potty gold. Nice.
Pretty good. Okay, so we as investors, as invested dads, we've been following one of the greatest investors of all time for a long time. His name's Warren Buffett. So Josh, what does Warren Buffett have to say about investing in gold?
So for gold, he says, it doesn't do anything but sit there and look at you.
That's pretty blunt.
Says gold has less value than silver to him as far as what the commodity actually does. And he actually does, in fact, own some silver within his vast fortune that he actually invests in and holds.
Well, didn't he make a comparison at one point? I think at one point he said, what would you rather have? I don't know if he said $1 million or $1 billion, but he might have said, would you rather have $1 billion of gold sitting there, or would you rather have $1 billion of ExxonMobil stock? I think that was the comparison he made when he said this, but this was a while back. And considering the uncertainty around oil, which go check out that episode. We did an episode about oil and what's going on. Let's not compare oil company to this. Let's say, would you rather have $1 billion of Apple stock or Amazon stock or $1 billion of gold? And he said he would take the company every time, because that company is going to grow. That company is going to innovate. That company is going to continue to change their product and try and, become an increasingly important part of the U.S. economy over time and the world economy. So that's what he says about investing in gold. And I kind of agree with him. I think that while investing in precious metals could have some value to some people, the growth aspect and the fact that you can be an owner of something that is bigger than you and that it's growing and doing crazy, awesome things over time is a really cool aspect of being an equity investor.
Yeah.
And something that you don't really get with.
Yeah. And there is volatility in precious metals.
There is.
They're just different volatility than in the stock market.
True.
In fact, in really good stock market years, you actually usually see the price of those precious metals go down. Again, back to it's kind of inverse, oppositely reacting to people are positive with our economy, so they own less of that precious metal. So there is volatility either direction you look. It's just different types of volatility.
So how can we invest in precious metals? Well, first of all, I want to say, always talk with your financial advisor and make sure that if you are considering investing in precious metals, that it fits your financial plan and will help you meet your financial goals. But that's what a financial advisor is for. But so I'm not advocating for anyone buying precious metals. But some ways to get exposure to precious metals are, you can directly buy gold or silver coins. Make sure they're from reputable sources.
You bite them?
Hopefully you have a place to store them.
How you know if it's real gold? You just bite it?
That's what I see on TV all the time. People are biting coins. I do that with the chocolate coins. It makes me look like a cool guy. So yeah, you can literally buy that. You can either store it yourself or have someone store it, that is a cost. You could also get this price movement and exposure without physically owning any gold physically. You can buy ETFs, exchange traded funds. Those tickers that come to mind, not sponsored in any way, but the iShares GLD and SLV, gold and silver. They track the movement of the prices of the underlying commodities there. And you can also get ETFs or even individual stocks for gold and silver mining companies that often have not a perfect, but a strong correlation with the prices of gold and silver.
And so those are the companies pulling out of the ground.
Yes, they are actively mining actual gold.
Okay.
So the question is, should you invest in precious metals? And I think that that's a difficult question to answer. But it's a great question for your financial advisor. And, my personal opinion is that it probably could be a small part of a diversified portfolio, but in most cases, maybe shouldn't be what your entire nest egg, should be invested in. So like Buffett said, it really doesn't do much. It doesn't grow. There's no innovating, no growing, no improving. But again, talk to your advisor.
Would you argue with the growth of companies and technology, which was what we've seen a lot of recently, that's actually increased the value of gold, even though it's the opposite because of the need of the new gold and silver within that new technology? There's been a higher demand. Like you said, 37% of new gold is being used for that.
Yeah, I wouldn't say it hurts at all, but I would also say that with where technology is and where it's going, that we will be able to make our own synthetic metals or whatever that do these same things before too long, and we will be less reliant on actual things that we have to mine that are really hard to come by.
All right. So we know that when we talk through some of these ideas, especially something like a precious metal, it could be tricky to navigate for an investor. So we always want to remind you that we are here to help. We do these podcasts to help, but if you need more and you don't have a financial advisor, just remember that Austin and I work at Hicks & Zerker Capital Management, and we have a link on our website that says Invest With Us. If you're interested in just talking a little more about that and seeing if you would be a good fit for our firm, and if our firm can do anything to help you out, we would love to have that conversation with you. So just click on that on our website and check it out. There's a team of us that work together, and we'd be happy to talk with you.
And as always, check out our free gift to you, a brief list of 8 principles of timeless investing. These are overarching investment themes meant to keep you on track to meet your long-term goals. It's free on our website. It's just a PDF. You can download it, and hopefully it will help you out.
Yep. So thanks a lot for listening. We look forward to talking to you next week. Austin, you have anything else before we go?
Yeah, I think, if you guys want to help us grow our podcast, we'd appreciate it if you subscribe. If you haven't already, leave us a review on Apple Podcasts. If you have any ideas of things you want to hear more about or topics or questions, email those to us, and we will get back to you at hello@theinvesteddads.com. And hit that share button. Share this episode with friends or family that you feel might be interested in the topic of investing in precious metals. Some people are really into that and might, be interested. So check that out.
All right. We will talk to you again next week.
Thank you. Bye.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.